My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. My friends, I'm just trying to make you a little money. My job is not just to entertain, but to educate and teach you. So call me, 1-800-743-CNBC. Tweet me, Jim Cramer. Minutiae. Minutiae can shake you out of tremendous investments every time. Today's Minutiae. On a day where the Dow dipped 55 points, S&P advanced 0.39%, NASDAQ gained 0.60%. Let's talk about what happened to the world's largest chip maker. Let's talk about Nvidia, which reports on Wednesday. Now, Nvidia is normally pretty open about its business, but like all companies, it has what's known as a quiet period that starts 4 weeks before the company reports its earnings. If there's something that very much impacts the earnings, management is not supposed to answer any questions about it during the quiet period, even if it knows the answer. It is always respectful of it, and you need to know that. Now, Nvidia reports this week, so it's in the final days of this quiet period. That means any news disseminated this week that could impact the company would put Nvidia squarely behind the 8 ball. Everyone knows that you can really throw off any company and its shareholders by injecting uncertainty. Sure enough, this weekend, a publication called The Information said that Nvidia is grappling with what it called, quote, new problems related to its much-anticipated Blackwell graphics unit for artificial intelligence, end quote. The machines are big, they are powerful, and by Nvidia's own admission, they run hot. The problem occurs when they are connected together in a customized server rack. Now, look, this is serious business, these server racks, the type of story I'd love to get a response to you about. But when I tried to get a response from Nvidia, I got, listen, Jim, we're in quiet period. We can't help you. So this really noisy, not great story comes out. I try to find out what's going on, and I can't. That means I have no idea if there's something that could delay large-scale implementation of Blackwell. That's their latest and greatest chip. Perhaps it'll be delayed until January, when management on record saying that the new product line could be humming. Maybe there's a problem beyond that. Or perhaps there's no real issue at all. Because the key company that installs Nvidia's chips, known as Dell, announced today in a tweet, quote, the first in the world Nvidia GB, the Grace Blackwell 200 NVL72 server racks are now shipping. The server racks that we were told weren't shipping. As Michael Dell went on in his tweet, quote, we are thrilled to deliver our liquid-cooled PowerEdge XE9712 to CoreWeave. The AI rocket just got a massive boost, end quote. CoreWeave is a new cloud computing provider that's been a voracious user of NVIDIA chips. Of course, The Information updated their piece with that info, which pretty much called the whole exercise that The Information had issued into question. Oh, boy, was the damage ever done? So then the question becomes, who's telling the truth here? The Information, which says there are real issues involving delays, or Michael Dell, who's telling you there is no delay? Here it is. I have known Michael Dell for years. He has not impressed me as anything other than a scrupulous business person ever since Dell came public for the first time in 1988. The Information? I first chronicled their activities back on August 2nd, just when they broke the story that Blackwell was running late. Funny, when I called NVIDIA back then about the Information story of Blackwell back then, the company had just entered quiet period, so they weren't allowed to talk to me. Sensing a pattern here? Quiet period, quiet period. Just like this quiet period, I could only sit on my hands and let the negative story wash over me. Funny, when that story broke, the stock was at 107. 5 days later, it was at 98. With NVIDIA back up to 149 earlier this month, you left a huge amount of money on the table if you took your cue from the Information's information. Now, I'm not guaranteeing a good quarter from NVIDIA Wednesday at all. Far from it. I've been watchfully waiting for full Blackwell shipments, even as the company's been saying for months that these chips wouldn't start shipping in volume until January. I was thinking maybe they were practicing underperform and over-deliver. Now, I don't know. In fact, I could argue that the Information news isn't news at all, though. The machines are complicated. They run real hot. I said that when I interviewed Dover CEO Rich Tobin here on Friday. Dover makes some of the equipment that keeps these data centers cool, liquid cooling. Before Blackwell, there were chips that could be cooled by air. Tobin says it's possible one day that Dover's cryogenic solution might be needed to put into play. Could happen. Why do I go into all these details? Well, there are several reasons. One is that Nvidia stock is arguably the greatest of all time. It's had a concentrated burst of strength that's almost unprecedented. This thing is no warhorse. You know what it is? It's a sprinter and a workhorse at the same time. It's Secretariat, a marvel of a horse that won the Belmont Stakes by an astronomical 31 lengths in 1973, a record that I don't think will ever be broken, just like Nvidia. Second, I meet Nvidia millionaires who thank me wherever I go, and I go to quite a few places. These people typically tell me how many times they've been freaked out or told to freak out by people who should have known better. And because I said, own it, don't trade it, they stayed the course. Many of these people bought this stock because I renamed my rescue mutt, Nvidia, back on June 20th in 2017 in a desperate gambit for you to understand that this was a big stock. Everest was rechristened on a day when the stock traded at $3.88. The stock's now at $140. In that time, I've realized that we've all become way too trading-oriented around here. Now, we're in Nvidia at the beginning of August of this year at 107 when the devastating information story broke about the delay, the one that Nvidia couldn't respond to, a hopeless piñata reviled by the short sellers and allegedly by the customers, although I couldn't find a single one who was truly aggrieved. Given the newfound trading proclivity, I have to wonder how many people had the armor of the dog Nvidia and how many had it wear off. It wore off. If it wore off, you forgot the amazing thing about Nvidia, which is that it has really no competitors. Now, here we go again. Maybe Nvidia mentions the information delay story on Wednesday conference call. Maybe we'll mention Michael Dell's shipment of Iraq Blackwell, suggesting, I think it suggests that they'll still have the opportunity to ship these chips in volume in January, which is what I've been led to expect. However, the trading obsession might have shaken you out today, especially because you couldn't hear a response from Nvidia because of the information to the story during the quiet period. But let me ask you, what if Blackwell really is delayed until January? Will that mean big wins for the people who paid beaucoup bucks to buy competitor AMD up for today? We own AMD for our charitable trust, like it very much. We own it right along with Nvidia, and we know it doesn't have product that's as good as Blackwell. If I weren't so against trading, I guess maybe I would have sold AMD up 5 and then buy it back lower when the erroneous data is washed out of the stock. I didn't do that. I don't play that game. Maybe you think Nvidia's customers are all hopping mad and willing to hold back money. That would be wrong, too. They have nowhere else to go for this kind of chip. So what then is this story about from the information? Is it much ado about nothing? Well, not if you work at the information. The information's job is to sell subscriptions. It's a noble goal. I did it for years. This story likely did that in spades for them. And Nvidia actually reports a shortfall. The new subscription will be endless. After all, if Jensen Huang starts out by saying, you know what, we blew it, the servers can't handle the heat, and Colette Kress, the CFO, quantifies all that business as loss and all the upset clients, then the information may have gotten a huge scoop. Maybe this time really is the top, and it's all because of the server meltdowns. But the bottom line, I actually am more inclined to think that you're getting a buying opportunity in Nvidia thanks to the information publishing a story that may simply not be that unless you didn't know all that much and you parted with Nvidia as soon as the news came out. Ann in Indiana, Ann.
Hey, Jimbo. Thanks a lot. I'm a really happy club member.
Oh,
but
fantastic.
I'm feeling Berkshire B because the forward PE is a lot higher. So, like, what are people worried about with their decline in earnings? And then when they bought and sold Ulta within a quarter, that sounds like some boneheaded thing I would have done because I didn't have conviction.
Well, look, these are big issues. And one is let's dispel the latter. I would say that Ulta was a position that wasn't Warren Buffett. Somebody who works there sold in and out. The forward PE, look, they have a lot of cash. You can't really judge that PE because of the cash. I think you hold on. I feel great about the stock. It's up 32% for the year. Berkshire B is a great situation, and I thank you for joining the club. Let's go to Clark in Maryland. Clark.
Come on, Clark.
Booyah, Jim. My stock is Isaac. Ticker FICO. A couple of months ago, you had recommended it, but my dad bought it, and it's up 30%. Is it time to raise the prices?
Okay. I had the pleasure of speaking. Will Lansing, actually, who's the CEO, was on our network last week. He told a great story. I happened to talk to him again this summer, and he's been on the show. And FICO has been one of our big winners, called Fair Isaac, but it's as FICO. And I continue to think it is a great situation. Kid's got horse sense, stays in the picture. Annette, New York, Annette.
Hi, Jim. I'm a first-time caller, long-term listener.
Excellent.
I have a stock that I currently hold. I have it for quite a while. It's up a lot since I bought it, and I just wanted to know if there's room to go higher. Should I buy more? Should I hold? Should I sell? The stock is Motorola Solutions.
That stock is incredible, and I should have profiled a long time ago. I kept waiting for it to pull back, and it just hasn't. They have no competitors in this public safety space that they're in. I think it's a great stock, and congratulations for being long it. Right? Maybe the story published by the information about Nvidia is true, or maybe it'll turn out to be another buying opportunity for one of the greatest stocks of all time and still be true. On Made Money tonight, Bristol Myers got a boost from a competitor's failed drug trial, but could Trump's pick to take the helm of HHS bring some headwinds? Bobby Jr., I'm breaking down the story. Plus, after last week's semi-sell-off, I'm digging deeper into what's holding back applied materials and if long-term growth could still be on the horizon. And speaking of tech, I'm going off the tape with AI player Lightmatter. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Last week, after we learned that President-elect Trump wants RFK Jr. as his Health and Human Services Secretary, the whole pharmaceutical complex just got slammed. Sell. And I think that's created some pretty great buying opportunities here. Don't get me wrong, RFK, let's call him Bobby Jr. for some Sopranos flavor. Bobby Jr. is incredibly hostile to Big Pharma, but there's a whole federal bureaucracy at HHS. And frankly, I don't think Trump will let him wreck a pretty important sector of the stock market. That's why I feel comfortable recommending some of the higher quality drug stocks here. I mentioned the other day, I like Bristol Myers, which now sells for just 8 times next year's earnings estimates, and it's got a 4.2% dividend yield. Remember, Bristol Myers has become one of the great turnaround stories of our era. From December of 2022 this past July, the stock was more than cut in half, thanks to worries about big-name patent expirations. Their major blood cancer drug, Revlimid, already facing generic competition, while their big blood thinner, Eliquis, and the revolutionary cancer drug, Opdivo, both go off patent in the next few years. Now, fortunately, a little over a year ago, Bristol Myers bought in Chris Boerner, that's Boerner, as the new CEO, and Boerner's a man with a plan. Under his leadership, the company made a series of multi-billion-dollar acquisitions to bulk up its pipeline, including a really special one, the $14 billion takeover of Karuna Therapeutics. That's an exciting neuroscience play, very hard to crack into that business. The new Bristol Myers wants to build a new lineup of drugs focused on oncology, neuroscience, immunology, and cardiology. I like this plan, which is why I've been recommending the stock repeatedly on weakness. When it pulled back along with the rest of the market in early August, I told you to pounce. Since then, it's up more than 19%. We had the new CEO on the show in September, right after Bristol Myers got approval for Cobenfy. That's the first novel treatment for schizophrenia in over 30 years. This is something they picked up from Karuna Therapeutics. Now, that would have been just great. It would be another great buying opportunity. Stock's up almost 10% since that interview, trouncing the 2.4% gain in the S&P 500 over the same period. That's very special. Now, look, I think Cobenfy is a game changer. Schizophrenia drugs, well, they're a gigantic business, but the current standard of care causes so many horrific side effects that it's very hard for people to stay on their meds. Most of these antipsychotics are like reverse Ozempic. They cause massive weight gain, almost inevitably resulting in type 2 diabetes. They can cause permanent facial tics, make you lose control of your tongue, sexual dysfunction. If schizophrenia wasn't such a terrible disease, no one would be willing to take these things. With Cobenfy, Bristol Myers has created a whole new class of schizophrenia drugs. It has a different mechanism of action. So it causes far fewer side effects, and certainly not severe ones, than these antipsychotics that we currently use. They're also studying this thing for Alzheimer's-related psychosis, and if it works for schizophrenia, it probably could work for extreme cases of bipolar disorder, too. I think it would also help a lot of people and also make Bristol Myers a fortune, of course, and its shareholders. Now, I bring this up because last week, before Wall Street got freaked out by Bobby Jr., we got some major positives here, at least from Bristol Myers' perspective. First, on Monday, we learned that AbbVie's competing schizophrenia drug had just failed 2 phase 2 clinical trials. They didn't show a statistically different psychotic system decline. In short, a potential rival treatment to Cobenfy failed. Suddenly, it looks like Bristol Myers has a big lead in schizophrenia treatment, might even have the space to itself. In response, the stock jumped 10.5%. I thought it maybe even should have gone higher. The next day, analysts at Leerink Partners, that's a healthcare-focused Wall Street research firm, upgraded Bristol Myers to outperform, arguing that Cobenfy could do more than $10 billion in peak sales if it gains approval for additional indications. That makes sense to me. I actually told management at Bristol Myers I thought it could do $14-15 billion. The Leerink analyst also feels good about Milvexian, which is a cardiology drug that's currently in phase 3 trials for atrial fibrillation, acute coronary syndrome, and secondary stroke prevention. Now, remember, in the not-too-distant future, Bristol Myers will lose patent protection for Eliquis. That's that blood thinner. That's going to do $13 billion in sales this year. By 2028, it is going to start facing generic competition here in America, and there might be competition in Europe as soon as 2026. But with Milvexian, also blood thinner, maybe Bristol Myers has something that could fill in the hole. But an interesting thing happened after the stocks began on Monday. It stopped going up. Even after the upgrade from Leerink last Tuesday morning, Bristol Myers pulled back a little over 1% on Tuesday before falling another 1% on Wednesday. After a flat day Thursday, the stock lost almost 4% on Friday, and that's thanks to the Bobby Jr. nomination. Now, we can debate whether or not Bobby Jr. will even be confirmed by the Senate as the next Secretary of Health and Human Services. And if he is, whether or not he'll be able to enforce his anti-vaccine, anti-pharma agenda in the healthcare industry. My gut says he'll be approved, but he won't be able to do all that much damage to the industry. For now, though, the selling was so bad that Bristol Myers ultimately finished the week up less than 4%. Despite that monster 10% gain on Monday. Now, I think that's nuts. These guys have a treatment for schizophrenia that doesn't cause morbid obesity, and that is the holy grail of mental health. So let me give you the bottom line of this incredibly important story. I think the failure of AbbVie's schizophrenia drug, which could have been a major potential competitor, is worth a lot more to Bristol Myers than any damage is likely to take from the Department of Health and Human Services, run by RFK Jr., a.k.a. Bobby Jr. While I don't want to dismiss the threat that Secretary Bobby Jr. could pose to the industry, I think the specific set of circumstances is giving you a fantastic chance to buy Bristol Myers on weakness. Although the stock's still up nearly 20% since I first pushed it in August. It's now trading at 8 times earnings, for heaven's sake. I don't think you've missed this one at all, especially after the stock came off the boil late last week. Mad Money is back after the break.
Coming up, chip stocks have dipped, underperforming the broader market decline in the last week. Cramer's looking closer at one name to get a read on what's ailing the space. Next.
After the initial Trump rally euphoria in the wake of the election, we quickly transitioned to a Trump rally hangover last week, with the averages getting clobbered. Now, some of the worst performers, they're semiconductors. Now, some of that's because tech tends to sell off when bond yields spike like they did last week. Now, some of it's company-specific, though, like the ongoing accounting irregularities at Supermicro. But tonight I want to talk about the key reason for last week's semiconductor sell-off, and that was a really good company called Applied Materials, one of the major semiconductor capital equipment makers, long a favorite of mine, which reported a seemingly alarming quarter on Thursday night. And then the stock plunged more than 9% on Friday. Rather stark. Of course, this breakdown didn't come out of nowhere. Earlier this year, Wall Street was pretty bullish on the semiconductor equipment stocks, betting that the chip industry was bottoming, and we were headed for a new upcycle. In the second half, though, the whole group's been obliterated, with ASML, big Dutch company, Lam Research, really quality company, now down double digits for the year, and that's extraordinary. Remember, back in mid-October, ASML reported an okay quarter, but truly hideous guidance, explaining that while equipment for AI chips was strong, the rest of its end markets were still pretty weak. Last Thursday, though, ASML held an analyst day where they reaffirmed their previously issued long-term revenue target, which would have been helpful. Except a few hours later, Applied Materials reported after the close. It wasn't helpful. Now, full disclosure, Applied Materials has a tendency to report solid numbers and not get any credit for it, in part because some of its rivals are struggling. This time, the company posted another solid top and bottom line beat, and record sales and earnings coming in comfortably higher than expected. I thought when I saw the numbers, this is good news. The guidance for the current quarter was basically in line with expectations, though the revenue outlook was a little bit light. Applied Materials guided for net revenue of $7.15 billion, plus or minus 400. When the analysts were looking for $7.24 billion, their earnings outlook, on the other hand, was slightly better than Wall Street was expecting. Those were the overall numbers. But when you check under the hood, you can see that some parts of Applied Materials are doing much better than others. Their core semiconductor capital equipment business, that's 73% of total sales, basically in line with expectations. But within that business, Applied Materials, 3 different divisions going in totally different directions. The DRAM sales declined 10% year over year, mostly because of elevated purchases from China the year before. Flash sales, a small part of the business, were flat year over year, and foundry logic, which is the main machinery, saw strong 12% sales growth. Even within the foundry logic bucket, though, there were some interesting and maybe disturbing disparities. Applied Materials called out robust growth at the leading edge, including a lot more spending from customers on so-called gate-all-around GAA nodes, which are essential to putting more transistors on a chip, while also throttling back its power consumption. That's a big theme of ours, making them particularly useful for the newest AI chips. This past year, the leading logic companies started moving their first GAA nodes from the R&D stage into high-volume production, and Applied Materials generated $2.5 billion in revenue from this business. They expect that to roughly double in the 2025 fiscal year. So just like ASML, Applied Materials made it crystal clear that the AI-related part of the business is absolutely on fire. But on the other hand, there's this Internet of Things, communications, automotive, power sensors business. Now, it's called ICAPS for short. These are the machines that help manufacture all sorts of established legacy chips that are more vulnerable to swings in the broader economy. Sales for ICAPS nodes were down year over year, which management attributed to high demand in the year-ago period. Again, that's mostly China, where demand is down big year over year. It's hurting all these guys. Ultimately, China was all over the conference call. Management touted the fact that the China mix came down to 30% of sales after being higher than that for a few quarters. But 30% is still pretty darn high, and it only came down because the Chinese economy is doing so badly. Long story short, a year ago, strong Chinese orders boosted the legacy part of Applied Materials business. Now those areas are suffering because they're exposed to the weak Chinese economy, and management has no idea when things will get better. In the rest of the world, Applied Materials can make more than that makeup of that business from China by selling tons of cutting-edge equipment for AI-related chip making. But they can't do that in China because our government's banned them from selling the best stuff to the Chinese. At the end of the day, Applied Materials told a story that was very similar to what we heard from ASML last month. The leading-edge part of the business is doing very well, and it should keep doing well through next year. But some of their legacy end markets with more exposure to swings in the economy are suffering. And there's just not much visibility into when things will get better. Applied Materials added some more China-specific color to that general narrative, but they basically confirmed what ASML was saying, which is not what we wanted to hear. Plus, with the election results from earlier this month and the second Trump administration coming in about 2 months, I am very worried about companies that are hostage to the Chinese economy. That will be a theme for me for some time. If you need a turn in China, let's just say I'm much less optimistic about that under Trump. Now, all that said, if you have a long-term investment horizon, I actually think AMAT still looks good. Actually, pretty darn good. Like ASML, which confirmed its long-term revenue target at its investor day last week, Applied Materials gave us some positive commentary about the long-term industry outlook, saying it still expected the industry to reach $1 trillion in sales by 2030. That's up roughly $600 billion this year. Now, due to the company's focus on helping to manufacture powerful chips that use less power, Applied Materials has a ton of exposure to AI and accelerated computing, and they are doing great. But if you're looking at the next couple of quarters, next couple of weeks, let's just say stock could become very noisy. So here's the bottom line about a company that I really like that is not working out. At the end of the day, Applied Materials is largely hostage to economic weakness, especially in China, for the bulk of its simpler equipment that's used to make all sorts of basic chips that go into everything and have big gross margins. That was the discouraging new information we got on Friday, and it's why Applied Materials saw its stock get annihilated. Unfortunately, it's just not clear when things will get better, or at least when the rest of the world will pick up enough to offset the Chinese weakness. Even if you like this one for the long haul, I say you got to be patient, because you're likely to get a better entry point going forward. How disappointing. I really expected more. Let's take some calls. Let's go to Robert in Massachusetts. Robert.
Hi, Mr. Cramer.
Hi.
Thank you for taking my call tonight.
Same.
I recently bought some Arista Networks just after they reported last week.
Yes.
And then the stock dropped, and I said, this isn't right. Then the next day I bought some more when the stock dropped.
Okay.
And thinking that they're going to split, next month 4 for 1, I thought, it performed better than what it has been.
Well, Robert, let's take it from here. See, Jayshree Ullal is the CEO, and she's done a masterful job. Now, interest rates went up, and that stock is really correlated with rates going up. It wasn't anything she said or did. The business is solid. Therefore, I would encourage you to stick with ANET. Let's go to Melissa in Texas. Melissa.
Yes. Hi, Jim. I want to thank you for all that you do for me.
Oh, thank you.
Okay, and I'll get right to it. I am wondering if this company has a future because it seems to be beating Palantir. It's Astera Labs, and I know the beta 2.67 is out crazy. But is this a promising company, like for the future, with all the AI connectivity that the company says it's doing?
And what's the name of the company?
Astera Labs.
Oh, my. They are very good. That was a fantastic conference call. I thought it was a great quarter. You got to stick with that one, most definitely. All right, let's go to Dimitri in North Carolina. Dimitri.
Booyah, Jim. Long-time listener, first-time caller.
Excellent.
Just calling in. I'm curious your thoughts with all of the movement towards ASTS and just space in general. Just curious your thoughts on the upside of ASTS, and then just generally, what are your thoughts on the competition with Starlink just coming in from SpaceX and then Tesla as a whole?
I think that I wrote a piece this weekend for all members of the club, and I singled out AST Space Mobile as one of the most dangerous companies in the market, up against really good competition. Don't feel like it has anything proprietary. I don't like that stock. Now, even if you like long-term story for Applied Materials, as I do, I think you got to be patient on this one because you're going to likely get a better entry point going forward. This was surprising to me. Maybe Lamb's better. I don't know. Now, much more Mad Money ahead, including my look at photonic tech company Lightmatter. It's private. It's real interesting. Plus, what's the road ahead for Tesla with reporting of Trump's self-driving policy plans? I'm going to tell you where I stand, and it's a little controversial. And, of course, all your calls rapid fire in tonight's edition of the Lightning Round. So stay with Cramer. We spend a lot of time talking about artificial intelligence and the chips that make it possible, but you rarely hear anyone go into the nitty-gritty of what makes the technology possible. For example, what's the biggest constraint on these fancy, super high-end semiconductors? It is the electronic interconnects on each chip, basically the wiring that connects all the transistors together. These have become a huge bottleneck because they can't keep up with the need for high bandwidth, low latency data movement that's essential for handling AI workloads. Which brings me to Lightmatter. That's a privately held company that uses photonics to replace traditional electronic interconnects. They can use light signals to transmit data much faster than even the fanciest wiring, which could represent a major breakthrough and help these ultra-fast chips reduce their power use. So let's take a closer look with Simona Jankowski. She's the CFO of Lightmatter, who came over from Nvidia back in July. Ms. Jankowski, welcome to Mad Money.
Hey, Jim, thank you for having me on the show.
Okay, so Simona, tell us about the opportunity that you're experiencing now, what you're doing, and why you think it can be such a big thing.
Absolutely, Jim. And I think you summarized it really well. In a nutshell, we're at the intersection of two megatrends. The first one, as you outlined, is that AI is driving very significant demand for very fast data center infrastructure. And at the same time, we have this interesting other trend, which is that we're approaching the end of Moore's Law. And so the runway there is really quite diminished. Now, if you look at the last decade or so, it was all about how fast can we make the chips. And in fact, you look at what some of the companies like my former employer, Nvidia, have been able to do, it's nothing short of astounding, increasing the performance of single chips by as much as 1,000 times. Now, these chips are so fast that the next big bottleneck that we need to solve is how can we interconnect them to each other at really, really high speeds. And in addition to that, how can we interconnect many of them in the thousands or in the tens of thousands to be interconnected in a single logical domain and be able to act as a giant single chip? And so that's where Lightmatter comes in with our photonic chips.
Okay, so we have tons of news constantly about how everything burns too hot. We had Dover on Friday. They talked about liquid cooling. Obviously, there's a news article today which says that Nvidia might be falling behind because the chips burn too hot. What can you do to make it so the data center doesn't burn itself up or spend so much of our electric grid and our electricity on their business?
Great question. Absolutely. This is one of the key topics and deservedly so. Specifically, our focus is on the network. So the network inside of these large data centers consumes less than about a quarter of the total power. And what Lightmatter is going to be able to do is enable end-to-end connectivity that is over fiber. So a lot of what happens in data centers today is that the chips are interconnected over copper. And so we spend a lot of energy converting from electrical to optical back to electrical at each layer of the switching network. And for a very large data center, when you try to get to hundreds of thousands of GPUs, you may have multiple layers of switching, each one of them undergoing that conversion from copper to fiber to copper. We are going to be moving that all to photonics, all to fiber, and that should save energy by a few factors, 3, 4, 5 factors or more. The larger the network, the more the power savings will be able to contribute within the network.
So who's working with you? Who is sampling your product?
So our customers are going to be the large semiconductor customers. So anybody who is making a large AI accelerator or a switch chip, what these have in common is that they need to have a lot of bandwidth, very fast data transfer. We would be working with any one of these customers. I'm not able to share specific names at this point, but we did just have a significant fundraise, and we are going to be using that to get ready for mass production.
All right, so Simona, what are we doing still using copper? I mean, everybody knows that copper is not the way that we even did it with telco. How come we still use it in the data center?
It's a great question. Most of our neighborhoods now have long since moved from copper to fiber. And this is really the final frontier. It's the challenge of how do you bring the fiber to the chip, which turns out is not easy to do. So our company was founded in 2017, spun out of MIT by a couple of absolutely brilliant scientists. These are some of the most preeminent minds in the field, most highly cited, have an enormous number of patents to their name. And it's really kind of cracking this challenge of, in that very tight, very constrained environment where you're pushing the limits of physics, how can you actually bring a very high density of fibers right up to the chip and get that signal off of that high-performing accelerator or switch straight into fiber? And
just for people's edification, I know that Jensen, your old boss, Jensen Huang, is always saying, Moore's Law is dead, Moore's Law is dead. You still referred to it as approaching to the end of it. Do you believe it's still alive?
I share Jensen's view on this, and we at Lightmatter are very much working toward trying to extend and pave the path to that next, what's next, now that Moore's Law is largely behind us. And, we really aim to do for this AI networking and connectivity space what NVIDIA has been able to do on the computing side. We hope to be able to bring 100 times, even 1,000 times speed up when it comes to the connectivity and the network.
Well, that would be huge. No latency. We all know that. We're all worried, by the way, about how much energy is being used by these, and we know that the grid has to be reinvented. You could really make it so we can go to the next level without that happening. I can see why you would take this opportunity, Simona. It does seem incredibly interesting. That's Simona Jankowski, CFO of Lightmatter, whom I met when she was at Nvidia. Thank you, Simona. Great to have you on.
Thank you, Jim.
Best of luck to you. Yeah, Money's back after the break.
Coming up, Cramer takes your calls, and the sky's the limit. It's a fast-fire lightning round. Next.
It is time. It's time for the White Round. Graphical loan. You say the name. You said buy, sell, sell. Don't know the stock question. Maybe it's staff risk. Play this out. And then the lightning round is over. Are you ready, Ski Daddy? Time for the lightning round. Crazy might start with Ed in California. Ed.
How you doing, Jim?
I'm doing well. How about you, Ed?
Oh, if I had a tail, it'd be wagging, sir. Calling you in reference to a company called. I'm calling you in reference to a company called Zezel. I bought into this company in May. It's up 18% year to, or 1,800% year to date, and I just, curious to know if you think this is sustainable.
All right. Well, first of all, I would take my cost basis out, so I play with Alice's money. I've looked at this stock. It's a straight up payments play that reported so much better than expected quarters. I understand why it's squared up. I also did a piece this weekend for club members about parabolic moves and how I don't like them. Let's resolve this by doing a homework piece. I'm going to bring in my chief scientist and research director, Ben Stoto, and we're going to get to work on this one. Let's go to Sam in New York. Sam.
Hi, I'm calling about one of America's biggest medical companies. Their stock is going crazy right now. I'm talking about Eli Lilly, LLY.
All right, this stock is as hated now as it was loved not that long ago. It is rather amazing. I'm kind of blown away. I think that it is a buy. Plain out and simple. We almost bought some today for the trust. We were restricted. I think it's enough is enough on the selling. Let's go to Reed in Maryland. Reed.
Hi, Cramer. Shout out Mr. Mark. Shout out to Ethan Cronin. The stock I was interested in was Coinbase. Ticker symbol COIN.
Coinbase is what I call an upstock. It's just an upstock. You're not going to stop it. Palantir's an upstock. Coinbase is an upstock. Robinhood's an upstock. These are stocks that they're buyers every time they pull back, and there probably will be to year end. Coinbase is a winner. Let's go to Dean in Texas. Dean.
Booyah, JC, from the state of Texas.
All right.
Hey, I've got one for you. IES Holdings. They've had a good run this year. The numbers are out next month.
This is a terrific infrastructure play. We know it. And one of the things I didn't know about it is it's Jeff Gendel's company. He's a terrific money manager. He's really fabulous. He gets everything. This is a just fantastic stock. I really, when we did a profile of it, we were not effusive enough for a $264 stock. Let's go to Ford in New York. Ford.
Hey, how are you?
I'm good. How about you?
I'm okay. I'm wondering what's your thoughts on Semtech, SMTC, and then possibly you could tell me about American Superconductor.
Well, no, I don't like it. It's always a bridesmaid, never a bride. I do think that Semtech is just a traditional kind of semiconductor company. I do prefer Texas Instruments to that one. Let's go to Bob in Florida. Bob.
Hello, Mr. Cramer. Thank you so much for your efforts to level the playing field for us not employed in the stock market industry.
Thank you. Let's go to work together.
My question is on CCJ.
All right, Cameco, look, all the uranium plays are up. I think that they're going to amount to very little in the end. This is not an expensive stock. I understand why you want to be in it, not versus the others, but it is an incredibly expensive stock versus the rest of the market. That's what I care about. I am a ka-ching when it comes to Cameco. Let's go to Young in Pennsylvania. Young.
What's up, Jim? Go Birds.
Go Birds. Go Eagles. What's up?
2 stocks. Buy, trim, or hold. Marvell Tech, CrowdStrike.
Okay, I happen to like Marvell. That's Matt Murphy. He bought $1 million worth of stock not that long ago. Really important to note that. It's really in the data center. It's got an optic component that's very important. I like Marvell. Wish we hadn't sold it, but we did make a lot of money. Let's go to Johnny in North Carolina. Johnny.
Jim, thanks for taking my call.
Of course. What's happening?
Big fan since the Colo Cramer days.
Oh, my. Yeah, Larry's the great guy.
I'm not that old, though.
All right.
So Apple, my call is concerning Apple. Its current evaluation, is it too rich for an entry point here?
All right, now, I say Apple, own it, don't trade it. If I had no stock, would I buy it right here? I would wait for a dip because the bears are all over it every minute of the day. Keep that in mind and then pull the trigger. And that, ladies and gentlemen, is the conclusion of the Lightning Round.
The Lightning Round is sponsored by Charles Schwab. Coming up, meet your next Uber driver. No one? After a push from the president-elect towards self-driving cars, Cramer's sussing out the potential for a nationwide rollout. Next.
Some stories are just too good to be true. And that's how I feel about the possibility of a federal proclamation that leads to a nationwide rollout of fully self-driving cars. Tesla stock was up again today because we're getting reports that President-elect Trump, who is an avowed climate change denier, has cast his lot with Elon Musk to develop national self-driving vehicles. It's pretty clear that Trump doesn't see the need for electrics. In fact, he wants to end any subsidies, including tax credits for manufacturing them. However, he did state, I'm going to quote here, "I'm for electric cars. I have to be, because you know Elon endorsed me very strongly," end quote. A little transactional for me. Look, I'm not against owning Tesla. You know that. I just think that this is a bad reason. Elon Musk tells a very compelling story about full self-driving as well as solar robots, all wrapped up into one stock of a company that happens to make vehicles. But the idea that the White House can somehow allow self-driving cars everywhere with the stroke of a pen, that's just plain fanciful. First, our country simply doesn't work like that. We have state and local governments with tremendous power to block anything. I remember when I was going to be able to take a self-driving taxi from downtown Phoenix to Glendale, the home of the Arizona Cardinals, a couple years ago for the Super Bowl. It seemed so simple, except Glendale didn't allow self-driving vehicles. I was incredulous, but the municipal government of Glendale was able to block us. Second, you might think it's natural for Trump to just declare the federal interstate highway system a self-driving zone. But you know what? That's meaningless, too. Think about it. How do you get on the interstate highway system? Other than a few municipalities that may be designated on some map someday, it's catch as catch can. The feds can't control state or local self-driving laws. If they try it, those municipalities will sue the Federal Highway Administration, and they're going to win. There was another time in this country when a president might have been able to do something about this. In the 1950s, President Eisenhower planned and executed the interstate highway system. But he did that for national defense reasons. In those days, we had a Cold War with the Soviet Union as an overarching imperative in our nation, which made the Interstate Highway Act a much easier sell. Still, I like the concept that there's what Barclays calls an Elon premium. To me, Tesla deserves the premium. Musk has no doubt influenced the president-elect to scrap the $7,500 clean vehicle credit, which will make it much harder for legacy automakers to ever compete with Tesla. We're going to hear from Ford and GM CFO at a conference on Wednesday, and we'll learn how their electric divisions can handle the end of those tax credits. I believe GM can handle it, but Ford, well, they may be stuck in neutral waiting for the warranty issues to dissipate, if they ever can. In the end, while I don't buy the national self-driving mandate, I think nothing truly dulls the case for owning Tesla. The Musk premium will work its magic in other ways, perhaps favorable municipalities and Tesla rentals next to federal highways. No matter what, though, always remember that Tesla's a tech company. The others are automakers. And a tech company can get an insanely high price earnings multiple with no one blinking so much as an eye about it. I'd like to say there's always a bull market somewhere. I promise I'll find it just for you right here on Mid Money. I'm Jim Cramer. See you tomorrow.
All opinions expressed by Jim Cramer on this podcast are solely Cramer's opinions and do not reflect the opinions of CNBC, NBC Universal, or their parent company or affiliates, and may have been previously disseminated by Cramer on television, radio, internet, or another medium. You should not treat any opinion expressed by Jim Cramer as a specific inducement to make a particular investment or follow a particular strategy, but only as an expression of his opinion. Cramer's opinions are based upon information he considers reliable, but neither CNBC nor its affiliates and/or subsidiaries warrant its completeness or accuracy, and it should not be relied upon as such. To view the full Mad Money disclaimer, please visit cnbc.com/Mad Money disclaimer.